And hello, everyone. Thursday, October 6th. It is another weekly real estate update with the bonus of the monthly September wrap up for the city of Calgary. And as always, Jaden Bax, welcome from Avenue Financial.
Hi, good to see you again. Just saw you last night. It's we're running into each other too much.
I know we do run into each other from time to time. So let's get right to it. We have a lot to talk about today. So we're going to do our regular weekly stuff, and then we're going to get to the monthly wrap up. So what I find very interesting is we've really settled into, on the detached side of things in particular, just not a lot of inventory coming on the market on a weekly basis. So we had 252 solds, which has kind of been, it's been in that range for the past 5 weeks here. I said 252 solds. I meant 252 new listings, 229 sold, so up a little from last week, with a sale to new listing ratio of 90%, 37 days on market. And again, that's for all segments, same as last week. 237 price reductions. Look at this detached listings number, Jade, 1,826. At some point in time, here's my prediction. At some point in time, there's going to be a changing of those interest rates, which you've been predicting, whether it's at the end of this year, early into next year. And if we continue in this low inventory, we're going to see a return to the craziness of spring. Just a prediction, just saying. I think that could happen because with the amount of inventory on the market right now, it's going to take a while for it to come back, but those interest rates will start coming down at some point too. Total active listings way down. 3649, because there's a ton of apartment and row townhouse sales happening, which we're going to talk about in the September wrap up. Our weekly look back at last year, we're just under 10% down in total sales, new listings almost 11% down, active listings still in that 21-22% down, pendings always high. Again, I need to check that number with Krebs because these are really screenshots from the Calgary Real Estate Board. So I want to double check those numbers. And then you see that days on market at 37. Interestingly, the average price up a couple of percentage points, not a ton, and the median price as well. So over to you with interest rates, Jaden.
Yeah, I think you've got a lot of news this week. There's not a lot going on with interest rates. We're seeing kind of the same things as we saw last week. Not a ton of movement. Same thing that I talked about last week, that 4.59 on the 5-year fixed high ratio, which is less than 20% down, does not exist. That is the best on the market. So there's one or two places in that area. Most everything else is somewhere between 4.74 to 4.84 right now. So that's probably what you're looking for in fixed. And it's a similar conversation with the conventional fixed. That's bumped up in the same kind of ratio of about 0.2 or 0.3% as that 5-year high ratio there. So you can still get some great deals on some lenders that are holding out. But it's all great deals relative to the market, right? So I personally think that 4.59 is a hugely high amount to pay for 5 years. It's just something that you're locking yourself into. What we keep talking about, near peak in the market, right? Because maybe you're scared of what's going to happen with those variable rates with what the Bank of Canada has been doing. So, same story. A lot of uncertainty, a little bit of fluctuation in that fixed area. We'll see what happens. I wouldn't say we're going to see anything coming down this year, but certainly expect it in next year when we've really hit that full-fledged recession. But getting inflation under control, it seems like they're trying to do that, and then all of a sudden gas pops up 30 cents a liter, 40 cents a liter because of a hurricane. So it's just you can't know what's going to impact our economy and how the Bank of Canada will react to that. That's my lesson for today.
So as you were saying that, I was banging around. This is a realtor that I follow that mentioned mine out of Alabama in the States, where of course they have interest rates probably worse than ours, that I understand anyway. So I found this very, very interesting. I wanted to throw it up on the screen. So So he's talking about interest rates and what should buyers do right now. And he says nobody knows what interest rates are going to do, not even the Fed. So that's like the Bank of Canada in Canada. My question for buyers right now is, why does it matter? What is the worst that could happen? You buy now and rates go up, great, you've locked in at a lower rate. You buy now and rates come down, great, you can opt to refinance at a lower rate if you want. You buy now and prices go up, great, your property is worth more, yippee. You buy now and prices go down, great. You know, so I would echo this. I'm not a salesy guy, as everyone knows that knows me and knows Jaden, but I think this was a super succinct way of addressing what's going on. Interest rates versus buy now versus later. Jaden, I'd love to get your thoughts on that.
Yeah, so what I would say is that I have never met yet, and I don't think you have either, somebody who has successfully gone in with a plan and timed the market exactly perfectly.
Yeah.
We've had very fortunate, lucky clients that were able to buy and sell at the right time, and then get back into the market at the right time. But they're not timing it. It just happened that was when their mortgage came up or whatever. So, you know, very much in line with this guy. If you are ready to buy a house, emotionally and financially, you don't need to let this make the decision for you not to do it, and, you know, wait for a more stable market. We don't know what 2023 is going to look like. My prediction is that rates will come down as we get into a recession. I am not an economist, and I do not work for the Bank of Canada, and I have no control over that in any way whatsoever.
What?
So absolutely, rates could go up next year, and then you're wishing you would have bought in 2022. So trying to time the market, just a fool's game in my opinion.
Yeah, exactly. And what we do know is, if you're paying rent, that is, you know, you need to look at buying at some point. So anyway, let's thanks, Jaden. Let's get to our market highlights for September. So I'm going to kind of whiz through this first screen here and drill down more in the individual segments. So total residential price still went up 10.7%, detached 12.9, 13, let's call it. Semi-detached 10.4% increase. Look at that, townhouses. This is why, because again, as we've been talking about, as pricing upward pressure on inventory puts pricing higher for those detached homes and semi-detached homes. People keep going down segments to something they can't afford, and that has certainly been the case with row townhouses. We'll get into that more in a second. Even apartments up 10.7% year over year. Our sales are down almost 12%, which we've been kind of predicting, looking at those week over week numbers year over year. Inventory still at that 21% down year over year. New listings, it's still down, right? Like we've been saying, this is not a surprise to Jaden and I, because we watch these stats every week. And then our months of supply actually went down to 2.34. Again, months of supply is taking the total inventory based on the number of sales currently happening. How long does it take for that inventory to get sold? All right, so here on the detached side, so the decrease in sales for the sixth straight month, driven by a lack of supply in that under 500,000, which I've been talking about as well. The increase happened in the 600 to a million range, decrease of 1% over August 2022 in terms of pricing. And then our prices are up 13% over September 2021. You know, I love seeing, you know, I think if you're a homeowner, that's where you like seeing the prices up 13%. But realistically, if you're actually in the market right now to sell or to buy, you're more concerned with the month over month and what's going on currently. On the semi-detached side, still sales still 6% above 2021, with the decrease in sales in September. The inventory is still well below long-term trending. 3 months of inventory, so a little higher than that average of 2.24. Prices were down in September, but still higher than September 2021. And then here's where it gets interesting. Row townhouses. Sales increased over last year's, contributing to year-to-date record sales pace. Inventory remains low. That's under 2 months of row townhouses. So you saw that the average was 2.24. You saw semi-detached was at 3 months. Prices unchanged from last month. So that tells you that there's still a lot of demand, because we've seen detached prices decrease as well as semi-detached. So our prices were 15% higher than September 2022. And the biggest gains in price came in the north. And then over on the apartment side, got to give some love to the apartment condo people. New September record sales, like record, all time. Year-to-date sales are 60% ahead of 2021. Why is that? Because people are coming in from Ontario going, hey, I would love to buy an investment property in Calgary. And guess what? You're going to be half or less than half the price of buying a similar equivalent apartment condo in downtown Toronto. I'll just give this example real quick. I was visiting my daughter downtown Toronto in July over Canada Day, and there was an ad in the elevator for a unit listed in that building. And it was $800,000 for a 1-bedroom, 1-bath in downtown Toronto, right by the Budweiser stage and that whole CNE area. And so that, if you went to, let's go to the Saddle Dome area, you can buy in the Guardian and buildings like that, super modern buildings for probably less than half the price. So that's, I think, what's driving a lot of that. So demand is high as our inventory is relatively balanced, though, in the market, and prices are 10% higher than last year, but we're still not back to where we were in 2014 for prices. So that kind of is the quick wrap up. I do it quickly because there's a lot of information. Here's the reality of it. As I said last night at our business networking meeting, it's always community dependent, as we talked about last week. Jay's up in the Crossfield area. And I know that Airdrie, because we didn't detail Airdrie, but Jaden, I know that Airdrie is still a pretty hot market, even though they've seen some decreases too, right?
Oh, absolutely. And then I look at, I'm working with a client today that's buying an Acme, and the house that you get in Acme is relative. If you plop that in Calgary, you're paying 3 times as much, right? So,
Exactly.
no, and even, the last week we talked about the community that a 15% loss. It's just interesting to see Calgary as a whole is not being impacted in that really meaningful way. 1% down month over month. That's why we do this every week.
Yep, exactly. So I would just encourage you, if you're looking to sell or just get an updated market value, we're doing these real estate reviews right now, and Fall did one for actually our home inspector yesterday, and then doing one for another client who bought up in McEwen, doing that tomorrow. And it's like what an investment advisor does for you on a yearly basis. This is one of your biggest investments. Would you like to know how it's actually doing in the market? So we are happy to provide that for you as well. My dog is barking, so that must mean it is time to go. So thank you everyone for watching live or later on Facebook, YouTube, and LinkedIn. You have a great week.
Thanks, guys.